All right, good evening, guys. This is Ken at Tortoise Capital. This is August 5th, small group coaching, cohort 1. Gonna say a prayer for all the folks overseas on both sides, getting ready to pay in blood for the failures of their leadership on both sides. Nobody wins, everybody loses. But the people that pay the price aren't the ones making the decisions. And that's the dharma of the warriors and the civilians. So we pray for them. All right, we got a lot to cover tonight. Let's go ahead and get started with why don't you, when it's your turn, just give us a quick check-in how you're doing and jump right into your material, and we'll just knock it out that way.
I'll go first because I'm going to be real quick. I talked to y'all, I think last week or the week before. I have put on hold all of my analysis where I am pulling individual stocks on a system like the PRX system in TradingView and combining them into a portfolio. I've put my efforts back into Quant Connect. My programmer's been gone for 3 weeks. He's back. So we've had a couple of sessions and trying to fine tune that and come up with a strategy that handles the portfolio. The main reason I'm not doing the just amalgamation of the different signals is the biggest limitation I found with that, which is common sense, is just buying power. And so just because in theory I can't take all 6 trades, I'm only able to take 2 or 3 depending on which of the stocks they are and how much money I have, and obviously what the R risk is percentage wise of the account, execution risk. So anyway, that's kind of where I'm at. I'm convinced that Quant Connect can do it correctly. Again, it's using different pricing than some of the other tools, so there's a little bit of a mismatch, which has made it harder. So I'm working on those type of problems, but looking forward to getting that working and getting some real portfolio numbers that I think have real heat, and market conditions kind of factored in and margin and things like that. So that's it.
I hope.
I
Sounds
hope.
good. Sounds good. Next man.
I can go next.
Okay, George.
I don't see a share window. That's weird.
I haven't done anything different. Maybe if I make you a co-presenter.
Oh, there it is. Okay. So today was minus 139R, which wasn't so good. I think the problem is my system isn't tuned to bear volatile markets. It was sort of tested on the last 2 months, which was more bull quiet. So I guess it's back to the drawing board. That's about it.
Well, I mean, this illustrates the point about mechanical trading on when you get a fat tail day like today. We got to know how it works on those kinds of days. I just, I still got to believe that the hybrid style approach where it nominates trades for you to take and then you decide to take them or not is the right way to go. Because on a day like today, when you say, hey, 30 minutes before the market opens, the Dow's going to be down 1,000 points. Well, maybe that's not a day to run a routinely, performing system unless we know exactly what it does on those kinds of days. So market classification and early indications got to be part of our considerations. The market is responsible for 50% of our returns. Sectors are worth 25%. So, you know, that's the learning point for today.
Yeah, I was actually working on that yesterday, and I split this into the up market and down market. And since the market peaked on the 16th, it only had really 3 good up days. So red
Well,
is,
I mean, that's an interesting insight for, again, you just add a market classification box, you know, filter on that thing to know what direction you want to trade that.
yeah,
Because this is not a system that's broken. It's a system that needs to flip and go the other way on a volatile market like today. Like those rules give 130 R day. So that would sort of tell you, like if you're getting an indication 30 minutes before the market opens, it's down 1,000 points. Run this system in reverse for 139 R. So that system doesn't even need to be tinkered. If you see my point.
okay, I can try that.
You might gear it to the size of the gap, size and direction of the gap. So there's something in there.
Yep.
Okay, next.
I can go next. Are you seeing my data?
Yeah.
Okay. So this is a review from June and July. I feel like in some ways I'm at a bit of a plateau, and I'm trying to figure out what optimizations I need to see to break through some of this. But here are the overall statistics. It was 144 trades, 41% wins, 59% losses, and the expectancy is 18 cents. I had a total of 25.63 R positive. I'm averaging a fraction over an R a day. I broke it down in a number of ways. One is by type of trade. My OR3s were doing a little bit better than I subjectively thought that they were. The OR3s, CDs, and SFCs are my better performing ones. The SSCs are negative. I realized right before our session tonight, I'd left out the EDs, which are, I didn't have time to do all the stats, but it was minus, I think, 1.8 R for the whole 2 months. So it was a little bit negative there. But my Kata 2s are really what's killing me. I'm taking a lot of Kata 2s that are just not working. So I've got to figure out what I'm doing wrong there. For June and July, I broke it down to see how I was doing in two versus 3 symbols. In June, I was just trading 2 symbols. And my performance was significantly better than in July when I was trading 3 symbols. So I've dropped back down just to doing EWW and DIA for right now until I get this worked out. I also broke it down by time of day. From 9:30 to 9:45, the first 15 minutes is pretty much represents OR3s, which are performing pretty well. Although I did have one 7R trade in there that might skew the results a little bit, but I did get the trade, so I'm not sure whether it's best to include that in the statistics or not, but it's there. From 9:45 to 10, I really am getting chewed up, and some of the Kata 2s are in there as I'm trying to jump on things, but I'm not performing well during that. But from 10 to 12, I'm positive. Lunch is not a great time to trade, and then I've taken a relatively small number of trades in the afternoon that also include a 7R trade, but that's been positive. And there really wasn't a lot of a difference between DIA, EWW, and XLE, I think overall, as far as which ones I was selecting to trade. So there, the
Now,
comment.
before you go further on that,
Sure.
let me just
Okay.
make this observation.
Okay.
Draw a vertical red line on where the market made its all-time high. And
Okay.
then I want you to notice what happened to your expectancy and performance to the right of that line compared to what the market did. The market's down 9% from that day, and you're not making as much money as you did before.
Well,
That is significant.
Well, I had a couple of thoughts on that. One is that part of the beauty that I hope will be part of the beauty of trading intraday is I can trade whichever way the market is going and have a reasonable performance because I can go short or long. But and I do know that I was having more trouble. I was late in trades and wasn't performing well in July.
Right.
When
And in July, as the market starts rolling over, the COTA twos do not move out like they did in June and in the start of July when the market is directional and up. When the market is directional and up, being late on a COTA two is tolerable because the tide is coming in and helping you.
Okay.
But when the tide is not coming in, being late means you don't get anything of the COTA two that was there, and the size of what's there is already also smaller.
Okay.
So
I had not thought of that.
So,
Okay.
so trying harder on COTA twos in that kind of environment is not good.
Okay.
And so I want you to look at the slope of the 30-period regression line, the daily 30-period regression line, and find the day where that peaked and rolled over and became an owl.
Okay.
And then look at the left side and then the right side of that. And you're going to see that's pretty close to where the market peaked. Like you never know when the market fully peaks, but you do know where the 30-period regression line rolled over, and that is the health of the market. When that thing rolls over, it's not good. And I posted a little note earlier today on Patreon that said, hey, I talked with Jay last week. He said, hey, I noticed the 10-period regression line is crossing the Bollinger Band mean in the river. Yeah, that's the end of that move. And that happened on 23 July. And it was sort of a classic collapsing dragon after that, which it lost another 40 points in that. So my point being is that changes in market condition, when they occur, make you think that you're doing something wrong in your system, when the performance is that's what your system does in that kind of market. So the slope of that 30 period is marking off significant windows in the market. You might also look at the MACD history, the 4 seasons of MACD on the daily. We look at that on the time frame on the chart that we're trading, but take a look now at the curves in the MACD daily and in the 30-period regression line on the daily to start looking for market classification that's timed to how your system is performing.
Do you see that on the short side too, that they don't follow through when the market is rolling over like this? So you'll go through, I guess if the market is really in a bear market and it's in a trend down, then you'd expect your short attitudes to work in that environment. But for right
now, in the winter, the volatility's just choppier. And but there does come a time when you just get used to the big meltdowns, and it doesn't. It just starts kind of gliding into the station, and there's no follow through. There's not huge moves on the upside because they get made and guys get out of that position so they can get their 1 day dead cat bounce. Well, that's okay if you're trading intraday purely, because you'll get the dead cat bounce, and you have to remember, don't hold positions overnight. So that's actually a really good time for you to be playing the intraday trade. You're going to get, because some of the biggest directional moves are bullish moves at the end of a harsh winter. But it doesn't have good follow through until it gets a successful kata two, and then it starts becoming a normal move to the upside. Where that 30 period regression line rolls over and starts to hook up, that's the owl once again. So it's good to keep an eye on that thing to help remind you of the impact of market conditions on these kinds of short-term moves.
Well, I will definitely go back and look at that. That makes sense. And one of the thoughts I had, maybe this will relate to that then, is that maybe I shouldn't be taking kata twos unless I've already gotten an SSC or an SFC or a CD that's working.
Well, that's one of the criteria. That is the criteria of a kata two, by the way. It had to have a successful SSC or kata two previously. That's what keeps you out of the chop inside the rip. Like if I got a kata two that fails, it's done. That's not another kata two. After that, I have to wait for like a Z3 pinch breakout.
Well, I've been using kata twos as entries when I wasn't in, for example, the SSC, and I was thinking, well, maybe I should.
You don't have to cash. You don't have to have cashed the SSC yourself to justify a kata two. It's simply the signal had to be there, and it would have closed a winning trade, and then you get a kata two. That's the continuation of the previous successful trade, whether you took it or not.
Well, would you just refrain from taking kata twos unless it's something that just looks really fantastic in this environment? Because that's what I'm seeing.
Well,
I'll get a spike and it'll come right back down and stop me out. Just
I still take them. Let me explain what I mean.
Okay.
Because even in this market, it's going to be sideways and choppy or something. Let me find my.
Sometimes I'll be right on the direction. I'll take a couple of kata twos in a row, and I mean it'll stop me out even on the same bar, or within a couple of bars. I'm like, well.
So the harsh winter happens, and then it crosses the dragon. And you're going to get the SSC entry somewhere around here. And then you end up whatever your exit was. Oops, that should be red. And your exit's there. And then you get something like there's a kata two. Because you have a higher low and you had a successful SSC. That makes this somewhere around in here a kata two. But if price is just doing this crap, that's not a kata two. That's not a kata two. That's not a kata two.
Yeah.
That's just feeding your hands to the alligators or the crocodile. It's the fact that you see this, whether you got this harsh winter trade or not, it's the fact that it happened, which means it's in play. And then the successful SSC says there was enough guys that were going this way that they got in and got out and still made money. And then when it makes a higher low and starts to reverse again, I now have actual evidence that there were more buyers than sellers on that side of the trade. That's a continuation of the SSC. But this thing in here is nothing until it scrunches down inside a frog box, and then the breakout gives you a Z3 pinch. And then you got to look at where when the Z3 lines pinch in here like this. When they are inside the frog box, then and only then can you think about breaking out of that. Now, what does that mean? It means that you're going to be trading from about open plus 15 until lunch. Because when you get a lot of this, until you get a genuine pinch, you're not having any trades. But then again, most of your winning trades were in this period of time anyway. So that's a pretty good window of opportunity. It may be that that's when you day trade, and the afternoon after lunch is when you sort out your swing trades.
Okay. Well, I'll have to go back and look and look at those things. It sounds like I may be taking some counter-twos that I shouldn't be taking. And if I'm late, I'm in a market environment now where you really can't be late because
Yeah, you can't be late at all. That's more important, by the way. That's more important than making some arbitrary decision not to take cotta twos. If it's an SSC success, then take cotta twos. So that RL30, that long and winding road, it oscillates over the river the same way the RL10 crosses the dragon. But this moment here, when that thing turns, this is when you're in owl territory. And this is usually going to be not later than about 3 days after all-time high.
Okay.
And because when the RL10, when it's really coming out of this thing, the RL10 looks like this. And when it crossed the Bollinger Band mean is when Jay says, "Hey, what do you think about that?" I said, "Well, that run is done, and I'm in the tactical intraday sniper only type of a move, looking to get one quick shot and get out. Where I want to be is in when the market's in benign neglect. The harsh sell-off is over. It hasn't started a bold recovery move. It's just failed to fail, and there's these tiny little step ladders coming up. That's planting season. But where we are now is freaking harvest. And guys getting their heads chopped off in the combine.
Okay.
So look at the slope of the look at the RL30 on the daily, and then draw on your performance. I'm gonna bet you that this is where
So the daily candles are
that's where the all-time high hit. I'll bet you.
okay.
Bet you a bright shiny new quarter. That's where that was.
Well, okay. Well, that makes sense. I mean, I'm doing a lot of. I had 144 trades.
Yeah.
I'm doing a lot of trades with an expectancy at that level. I would like to improve in the cotta twos. I mean,
Right.
that's
Yeah, so you're making
that I did.
pennies. Yeah, you're making
Right.
pennies and nickels on a dollar at a
Right.
time when the market is in a raging sell-off. You know, before you were making money like this, now you're making money like that, but the market's doing this. So you got to be a little philosophical about that too.
Okay. Okay.
You know, hey, it's raining and I'm getting wet under here, under my umbrella. Yeah, did you see that guy with his house just went by in the river? Yeah. So
I will say that we had those couple of down days. I had some really nice trades that are not represented on this log, but I gave.
yeah, I mean, I was looking at him last Thursday, Friday, and today. Wasn't bad.
But some of them, I gave back doing these cotta twos where I gave back, 2, 3R, 4R, I didn't really have to, yeah, just not happy with those. So
Yeah, and then these right here
explains that.
These stats show it's a toss up between which ones are best for you. I would keep DIA. I would pick the one of those. I would pick. Oh, that's XLE. I thought that was EWC. Yeah, I think Look to see if the days that they're working, there's an overlap, or is it one or the other? If it's an overlap, then just all you need is one of them. But if there's no overlap, their performances are good enough to trade. I mean, there's not much to choose from on the winning rate versus the expectancy.
It's just a
So-
matter of my focus. I think I'm gonna just drop down to just trading 2 for right now, and let me get really clear. And then, so I'm just not quite ready. I'm not doing as well with 3, I guess. So I'm gonna just drop down to 2 and not force it, improve, and then
Yeah,
expand. Up.
get to 2 and you're not ever late.
Exactly. I was late on a number of
Let's
things.
my acronym for that is QFA.
Okay.
The polite version of that is quit fiddling around.
All right.
But
I can,
it is expressed with the same tone as the impolite version.
okay.
It's not, hey, gee, maybe you should quit fiddling around in a nice way. No, quit fiddling around. Get to perfect execution on 2.
That was how I was feeling. Okay.
Yeah, just show that you can do it. Show yourself that you're serious about this now. I gotta get to 2 and really uncover. I gotta get all the peanut butter out of the jar. I'm paying for it.
Right.
And don't throw peanut butter away. You know,
Okay.
get in there with a little handheld biscuit, clear that. Anyway,
Um,
I drive my wife nuts with that when she sees the way that I optimize the excavation of peanut butter jars.
I'd have to go in the closet to do that in front of my wife. So
Right.
I feel you.
All right, let's go back to your. Let's go back to your text.
Well, we talked about a good bit that's on here. I had some technical questions, and I can
Yeah.
email you these later. I don't want to take too much time, but we talked about some of the Kata 2 issues. One of the other ideas was maybe I need to expand my wrist box from an R10, maybe it's expanded 20% to an R8 and give myself a little bit more room.
I think the R5 is the right one, even on the 3 minutes, because then you remove all of the anxiety of the size of the box. Just use the R5.
It just seems so big when I put it on there.
Okay,
So I was trying to cut down a little
split
bit.
the difference. Quit fiddling around. Pick
But
the one that makes you not worry about it.
that lets you get your technical exit
Okay.
less than an R5. Something bigger would let me get my technical exit where I have
Okay, R 7.5. Is that what you wanted me to say?
No, I was
Okay, then
agreeing
do
with you.
that.
Just in general, having a bigger
Sure.
box lets me have my technical.
I know, I understand.
Or the
Pick one.
maximum.
Pick one,
Yeah.
split the difference, and remove it as a source of wonderment. Just pick it, and then you're going to
Yeah.
tune it anyway. The next thing I'm going to say is the same thing I said to Sandeep is I think you have enough skills at larger market turning points that watch the RL30 on the 30-minute chart. So that means you got to go back, over the last 3 days and see those turning points. And now when this thing comes up here, it's supposed to get all the way to here. But if that starts turning right here, as soon as that fails to follow through, you got new information that the 30 is stalling. That tells you when you drop down to the 3s, it's already doing this. And that's the time that you should be really looking to pile on. So when you're looking at how about this? Keep the 3 symbols that you have. All right. And
Okay.
figure out which 2 of them are best postured near a turning point on the 30-minute charts, like it's in the sweet spot here or here on the 30-minute chart.
Okay.
And then pick the 2 that are in the longer term sweet spot, and then just murder those 2 with your 3-minute system.
Okay, I do mark the turning points on the 3-minute charts, but I could definitely be more mindful starting out the day where they are in relation to those.
Yeah, are you using the 30-minute chart to make the marks?
No, I use
Yeah.
them, but they're also showing up on the 3 minutes. So I'm not
Yeah,
looking
yeah,
at
yeah.
the 3
Okay, yeah,
minutes once
yeah, that's
trading
fine.
starts. I just
Yeah,
look
so
at
if the
3 minutes.
30-minute looks like this, and I'm getting ready to trade on this day, I would prefer, like if this was symbol A, we're right in the middle of his traverse, you know. Maybe this is okay, because I've still got 2/3 of the move to the upside. So maybe this is where maybe that's a good one. Because we've clearly made the turn, but there's still a long way to go.
Yeah.
I like that one because that's a SSC on the 30-minute, which in order to get this kind of SSC on the 30-minute after this harsh winter, this thing when we dial in on the 3-minute had to have shown a couple follow-throughs and successful kata twos, and that thing is the shorter term guys are already happy. And now you're just starting to get the 30-minute guys happy, and they should be willing to let it go. But if it doesn't work out, then what that is telling you is it's getting ready to do this. And you can pound the shit out of that one. Because that's a collapsing dragon in the making.
So if
And
it's near that lower 30-minute turning point, in other words, you're looking to see if it breaks down below it, you can trade that breakthrough, or if
yeah,
it starts to turn into an SEC.
yeah, that is the let me see the chart that I posted today. I posted it from work, so I gotta go to my homepage here. Hey, go ahead and stop sharing that for a second. I just want to illustrate a point. So slow. There we go. Yeah. So this was where on the 24th of July, Jay sent me a note. When it did this, it had already peaked and come down, and then the follow through sucked, and it was just starting to hint south. And that takes this form. So this is a kata 2 to the downside, and that's a collapsing dragon off of that low.
Yeah.
So if that's what the daily chart looks like, your RL30 looks like this. And so that's sort of a halfway point, and then this is the owl on this side. That's all this, and that's all this. See, failure is supposed to recover. It did not. And that's today. As of this morning at about 10 a.m. About 90 minutes into the session. So that's what I wanted to say about that. All right, back to let's look at your text one more time. See if there's anything else on there we needed.
Let's see. I can email a couple of these questions to you. So
Okay.
one of the thing that sometimes throws me off, and this may just be psychology, is some things, for example, it's made of a harsh summer.
Yep.
And, you know, it'll pause and the MACD will come down and make another harsh summer. I keep thinking, well, it's already made a couple. It's going to slow down. I can't keep taking these. It can't keep doing that. I can't keep doing that. And
But it will.
but it but it will. So
Yeah, it's
I don't think I'm
easier to
thinking about
believe.
that the right
Yeah,
way.
it's easier to believe on the upside. And what you got to remember is that when you're looking at the RL10 and 30, your RL10 and 30, you have these little, prices moving up, and you get leg 1 and 2, and you end up getting the third leg. That's really just leg 1 on the next higher time frame.
Yeah, that's
So
true.
on the 1030, this looks like that. This is still the turning point for all future prices because this thing came all the way down. But if we're trading on the 3-minute bars, if the 10-minute bars and the 30-minute bars and the 90-minute bars and the daily bars all get persuaded at various points on the curve to come in and add their money, what this will do is you'll get leg 1 on the 10-minute bar, and then it does leg 2. Now they may not give it leg 3, but you'll get another 3 in there for yours. So that's where you get these crazy moves. It's because the 10-minute guys and probably the 30-minute guys were activated and came in and added new money to this. Whereas down here, this is just the 3-minute guys trading with each other. What happened at this turning point is all the 3-minute guys were smashing this thing south and then ran over to this side and smashed it north. And they think they're done. And now suddenly, oops, the 10 and the 30 guys come in and this thing doesn't stop. It just keeps going. And if you got 3 legs on that one, that may be leg 1 here. So you got to remember that there's these other time frames that are activating their prices
Right.
off the higher time frames. So the only way I can manage that myself is just say, look, if I found the low of the day, the maximum reasonable move I can get 5 out of 6 times, it will not go beyond the range stat. So if I see leg 1, leg 2, and coming into leg 3, I'm pretty sure that it's done for the day. And 5 out of 6 times I'm right. 1 out of 6 times, that thing just goes boom. So wherever there's a range stat move, and I'm monkeying around down in here, I just come up here and put a contingency buy order on it in case it just blows through the range stat, and then I'm surprised into the position. And 5 days out of 6, it never hits. But the day it hits is another day that I would have been my damn, I'm thinking about it and then regretting. So I'm not going to regret.
Well, it
In
sounds
the,
like,
in
yeah,
the
go-
same way that if today was if yesterday was a critical state and then that was the range, I can just go, hey, here's my longer term swing breakouts. So I'm going to be trading inside this little space, whatever, fighting for pennies, but well above and below that daily range, I'm ready to just get in for like swing trades. And then back to the 10-day high, wherever that was, and the 10-day low. So I just have those built in. Because then when I shift to the 30-minute or the 2-hour or the daily or the 3-day, those look like the first normal, reasonable, easy entry. And on those time frames, you would say, hey, if the price ever got out of this cloud and broke out of this, man, I could start getting long there.
Yeah.
But sometimes when you get tied up in the tactics, with the microscope, that looks so inhumanly far away that you
Right.
say, surely that run's got to be done. And it's just a matter of perspective.
Well, it sounds like the MACD it can go summer to fall, summer to fall, summer. I've just got to try not to predict the market
Yeah.
based on what it's doing. That it can do that as many times as it wants to, and I've just
Yeah.
got to not let that overly influence me.
I would agree.
Okay. Okay.
Okay, that's good. All
Sounds
right,
good.
Sundeep or Juan?
I can go.
I can go.
Go ahead,
Oh,
Juan.
sorry. Why don't you go ahead?
All right, mine is quick anyways.
Yeah, go for it.
Not much to report today. So I finally had enough data to do some stats. So kind of happy that the system is working very close to the model. So although I'm running with a pretty much break-even system, the execution of the trades are very, very close to what the model is telling me. I've had some good trades, obviously, to the short side more than anything else. And so here's the model, and here's the live trades. In the good trades, I've had better results than in the losses. In the live, I have a little bit higher.
Yeah.
But it's good. I've had 18 trades.
What's
and,
the time frame? Is that about 10 days?
when did I start? 7/15. Yeah, like 20
So
days.
more like, yeah, okay. Maybe
So,
15 days. Yeah.
yeah. So that's my distribution. So it's very close, the model to life. Most of the differences, it's due to slippage in the moment of the market order. 1 cent on the exit, 1 cent on the exit.
Yeah, you should draw those as boxes.
Like
The ribbon gives deceptive information.
okay,
I
so
think in the future, I think you want those as boxes.
okay.
The visual display will make it easier if it's boxes.
Let me see if there's an easy way to do that. Columns, something like this.
Yeah.
All right. Yeah. Yeah.
That gives much better clarity. Now, what is the blue versus the orange?
So, where's my, let me see this change. Blue is model. Red
Got
is
it.
live.
Got it. Oh, okay, that's good. We want it to be parallel, just like that then. Yeah, see, that gives you much better clarity.
Yes. So in the equity line, it's looking like this. So the slippage has caused a little bit losses here.
Yep.
But it's very in line to what I was expecting. So super happy with that. Over the weekend, I was short and I went and it closed the trade. So if I change screen, stop, and I share the other one, where is the shit? I lost the shit. Oh, here it is. Oh, here's my remote desktop. Share. So yeah, on the weekend, I was short Thursday and Friday, and it took me out right on the dragon as expected.
Yeah.
It barely touched the RL10, but it didn't close under the RL10 right here. So I didn't take the short over the weekend, which would have been good. And then I entered with the frog. I lost a frog here. Then I entered into an SSC, but since it's a bear market now, it took me out at the end of the day with a break-even actually. So that's what I have. Super excited that it's working and that it's doing what it's supposed to be doing.
Okay.
Moving forward.
Yeah, tomorrow's a critical state. It's been down over 1,000 points and everybody's scared shitless. So that's when rule-based systems should rise to the occasion. Tomorrow's a good day to be precise.
So looking forward to it. So all good. All
Okay.
good.
So indeed,
Okay. So I am continuing with my discretionary trading, and I'm actually enjoying it quite a bit. I was trading EWW, but I'm just focused on DIA. I feel like it
Yeah.
has enough
Yeah.
to meet
yeah,
my
and
needs.
it's easier to scale with futures in the
Yeah.
near future.
Yeah. So I mean, I like it. It I mean, it easily, I think, will meet my 5 hour needs. I'm doing 2 to 3 hour a day. And
Look
the
how
only
good the
reason-
dragon is.
Yeah, yeah. And the only reason is I'm sort of scared to let it run because it is so damn good when it runs. But I'm still scared with the shorts in, so I'm learning.
Let it play with, give it fun money to play with that it earned.
Okay.
So if you know what your performance stats are and you have a little extra larger lottery win, let it has earned that. It earned its fun money.
Okay.
Let it have a chance.
Okay.
Psycho-
one question
Psychologically,
Sure.
that's the key point between when is it your money? When is it its money? And you want to give a little profit share. It wants to play, let it work out of its profit share.
I see.
And then if it makes money, you feel like a benevolent dictator. If it loses money, you get to feel like the wise uncle. See, I told you. I mean, so that's a win-win for you psychologically. Question D. Is there a RR justification needed for the second K2? Nope, just take it. Short
Okay.
side Kata 2s, pound them into oblivion because it's 3 times more emotional charge on the downside because more people are panicking, have greater fear compared to Kata 2s on the upside when the successful traders are full and they're not as hungry. So there's less follow through, but the fear can run forever and it's immediate and visceral. So we are really wired for pain avoidance. So that means when there is pain, you can pound it.
Okay. That's super helpful. Yeah. Okay. So I think this was the only set of questions I had on my trading.
Yeah.
I do need to work on my SWOT, which I don't believe I have done so far. So I penciled in something with my template here.
Yeah.
Can you see the SWOT template?
Yeah.
Okay. So maybe, Ken, if you don't mind, give me a 2-minute overview of what am I trying to do here with the 5 boxes.
All right. So what we want to do now is use a businessman's, an angel investor approach to our business plan. And where you make the big money in business, let me get my. Just a minute. Where you make your big money in business is getting your strength onto an opportunity. So this is when you get the big win, double plus win in here. So there's things that you can do, like the TC 2000 bundle, like the optimizing the Kata 2 shorts in a bearish run. The place where you avoid the greatest disaster, which is a good payoff strategy, is when a threat is able to hit your weakness. This is a double minus loss if you don't do anything about it. So you need some strategies in here that allow you just simply to avoid or hide from these threats. Isolate or insulate. Don't let it get a grip. The third place that you can do is this prevents immediate disaster. It buys time for you to get better. This area here, category 3, is when I know that there are weaknesses, but I have an opportunity to do something about it to raise. These are called like hygiene factors, but raise the bar, raise my or improve, slowly improve my weaknesses. Like if I'm out of shape and I just improve my diet and walk to the store instead of driving to the store, whatever, I'm just going to get better slowly. It's not going to make me an Olympic athlete. Nobody's going to pay me, but I'm improving my immune system, lowering my blood pressure. This is just kind of like general fitness that allows you to endure more, raises your energy level. So this one is where you get the 10R wins conceptually. This is just improving my win rate and reducing my losses because my weaknesses aren't as weak. So even if it's a weakness and the threat does get through, if the threat is able to avoid my strategies, my weakness is not as weak, so it doesn't hurt as much. The fourth category are ones where you say, God dang it, that threat is so strong that what I got to do is use some of my strengths and I got to intervene. I got to take it out before it ever gets onto my weakness. Now, there's not an immediate big payoff for me, but I'm taking him out and I'm reducing my long-term catastrophic losses. So that's like if you were a near monopoly and in a bookstore and you lowered your cost of sales in that town so that you were losing money on every book, you might put the mom and pop shop out of business and then you can raise your prices and get back to, because you got your other good stores where there's strength and opportunities carrying you. So category 4 is where you decide I have to actively intervene to defeat the threat using my strengths. I just got to smash that. You know, you got a strength of being a coder. You might say, what system am I experiencing unacceptable losses? Code the other side of that trade. Use that as a see when it's stalking. Study that the other side of the trade. What's their filter that tells them that they're getting close to a win? Now you can use your strength of coding to give you an early alert to get out of your trades or to capture wins. You may or may not choose to do the other trade, but at least you're using your strength to prevent that threat from hitting your weakness. Or you might just say, look, when I get the alert that the other side of the trade's starting to work, maybe I just use that I code that as an exit in my own system, where I don't take the second position. I use the sniper entry on the other side to be a sniper exit on my side. So now I have 4 buckets of strategies. Now I can't do them all at the same time. So what I'm going to do in strategy 5 is I'm going to do the mix. I'm going to make sure that the most promising big wins are in there. The best defenses against the most dangerous risks are in there. The simplest, easiest, no-brainer, no cost, high payoff things I add. And then I make a deliberate decision about, am I really going to try to cut them off at the knees? And then when you get done, you end up having a modified list of integrated strategies. And then you just do that with priorities and resources like time and money to fix that up. But that gives you a more balanced and responsive kind of strategy, a strategy of strategies. Because otherwise, you just want to, I only want to do the things that are fun. I hope he doesn't get me. I'm not going to do anything to improve my health. And when he does get on my weakness, I freeze. Well, that's not a good strategy. That blended approach allows you to sensibly balance your growth in your, if we're talking money, it's your growth portfolio. It's your insurance. It is your long-term buy and hold with relative strength winners, plus some income, 60-40. And this may be a hedge, these may be hedging strategies where I'm actively making money on the other side of my normal trade. Or maybe it's an options play to protect. So I don't have to liquidate this because of the income. I could instead do an options play so I don't have to tamper with my long-term winners. So what's the right mix of those four categories? That's what strategy 5 is. Check or hold?
Okay. Yep. Thank you.
Yep.
Okay. Wonderful. Got it.
All good?
Yes. Thank you.
Yeah, I have us at 8:03. Hey, there's a couple things we worked on over the weekend with Hassan, or yeah, or Hamad, I mean, excuse me. Hassan, I'm so tired I am. We improved the daily after action review to do, you've seen these at various times, but this is sort of an integrated one. You do the standard. Oh, I have to actually share the screen, don't I? Yeah. Duh. Yeah, so this one up here is the standard plan, prepare, execute, assess, sustain, improve, then specific actions, and then choose the actions. What I asked Hamad to do was to go through his little coaching session and listen to all of the things that were being said, because it was kind of like machine gun delivery. And some of the things were, wow, really good ideas and great insights. I said, hey, these were the things that weren't working. And generally is we want to say, why were we trying to do it that way? What was the purpose and intent? So maybe we can find a different way to achieve the same outcome, or we got to change our mind to learn how to do things in that way. Sometimes we're growing as people. We've got to learn to adopt different perspectives. Things that were immediately obvious and could be put into action right away, publish it, put it in your book, and just start going with it. Not always the best thing, but sometimes it is. But this is the one that has sort of like the biggest payoff. This is one just, oh yeah, wear your safety goggles before you need them. Big questions are things that we commit to answering in writing. And then the biggest surprise is interesting because this is the aha moment. You know, as adults, we think the world is a certain way. We make an estimate and we expect a certain range of results, but then we get a surprise all out of proportion to our estimate. Every time that happens, we have to get reminded that we have a mental model of how the world actually works. That's your planet Earth right there. So we abstract that into a mental model of how the world works. And then we use rules and knowledge and the condition of the market. And all that comes into an estimate of what's going on, which we think is the truth. And then we act on that. And then we expect that the results are going to be somewhere on this curve. And then it turns out our estimate was wrong, and we a surprising result that was way out here or way over here. And it's like, wow, never saw that coming. And what that means was that there was some kind of, somewhere down in here, there were assumptions and beliefs, feelings that went into our mental model about how the world is. And when we get a moment of surprise, what that means is that there was something down in this unconscious or subconscious area that was probably not right. And so surprises of that magnitude are the ones that tell us our underlying paradigm of the world is wrong and needs to be corrected at the root level. When you do that, your models are automatically updated, your rules will improve and adapt. I mean, as long as your results are within the range of normal, then we can just tweak our knowledge and our rules, and we're just going to incrementally get better. But when you get surprised, it tells you that maybe there's something fundamentally like, oh, minus 139R today. Oh, that'll change your mind. And that says, hey, there's some assumptions, beliefs, or factors or facts and theories that are different, that are not complete, need work at that level. Before, we're not just tinkering with rules. We got to look at anyway. So that's what you would put in the biggest surprise. And then what you do is the best things, you do more of them. Worst things, you explain the purpose and the intention and what we were trying to do, and then you just adapt it to try to accommodate that requirement. You publish and apply the best takeaways, you answer these in writing, and then you examine assumptions about how and why. So when you go through your daily after action review and you're looking at your charts, you should, oh, that worked, that was not so good. I learned if I did this, it would be really good. So always do that. I got to ask Ken or think about a research project to get after these things. That one I didn't expect at all. And I got to do some deep think about that with my trusted others to see what is the foundational or the fundamental thing. So that was an update to the after action review that we were talking about. I will, this one is a visual display. I cover it in the session that I did with Hamad, where I said, look, when you're trying to solve problems of different types, you typically have either by default a fixed mindset, a growth mindset, or a blend, which is called the benefit-oriented mindset, which picks and chooses the circumstances in which to use growth and which times to be fixed. So there's a lot to be said for this is like a market condition, the benefit. When you got a structured problem, you should just do the right thing. You know what it is, it's well-trained SOP. If you have a semi-structured one, you're going to develop a couple, 2 or 3 different plans, weigh it, measure it, compare it, and pick the best one that comes out of your rehearsal. Unstructured problems, you got to go back and start from the beginning with design thinking, questioning assumptions, blank sheet of paper, and try to come up with a new semi-structured problem that could be rendered into a couple different courses of action. You keep running your design process until the results of your effort to make it semi-structured start paying off. If it doesn't pay off, well, you kept your design process going, and with the new information, you update that and try to come up with a better problem frame. Well, if this is your long-term rational mindset about how the world works, day in, day out, this one has to do with your emotional posture. Where I want to be is a healthy skeptic. I know that if I cross over the line and become a naive optimist, that's bad. And similarly, if I cross over the line and become a dismissive cynic, where I believe that I already know the answer without evidence, well, that's not good. So actually, the ideal place, some would say, is the perfect zero state of a healthy, in this case, for an unstructured problem. If I'm in an unstructured problem, I may want to use a benefit mindset so that I can fully explore both the growth side and the danger side. So don't make a judgment too soon about which one of those to adopt. I believe in an unstructured environment, you should be in the benefit. In a semi-structured, I think depending on what the array of outcomes looks like, probably growth. If I'm in a structured problem, there's probably not huge wins, so I just want to make sure I do no harm. So, but you decide. So one of the things I can do is here, I actually want to be in this column most of the time. I want to have just enough optimism that I'm still mostly a healthy skeptic, but I'm leaning towards an optimistic view of the world that believes in possibilities, but I don't become a wild fanboy over in here where only good things happen. And I know that if I spill over into this a little bit, I take my second position, if you will, increase my risk a little bit because I had success here. I got to beware that I'm also getting close to the point where it collapses. So in my ideal state, I'm somewhere in these two. Maybe I'm right on the boundary. I don't know. But this is sort of a quick mindset. I'm writing a book on this to say there's about 5 indicators to tell you what kind of a problem you have. And then there's about 5 indicators for each one of these to show what your long-term posture looks like. And then there's about half a dozen attitude checks to let you know what you're actually feeling like, and is what you're feeling like dangerous, or is it optimal? So this is sort of a check-in. What I'm looking at doing is making an app. So the bell rings, you quickly plot, here's where I think I am, and then just collect that biofeedback data over time and see if that little action of periodically using this table allows me to break the cycle of dependency on my emotional states. Does this give me the ability, when I do that rapid assessment, to get into my zero state quickly? Because this piece usually doesn't change that much. This is an OR3 or Z3 breakout, or the mechanical swing patterns. This is the SSC and CATA 2. This is hey, I see an opportunity and I'm going to try to frame it as best I can. I'm going to fit the best pattern on there that I can. I'm probably in a growth mindset if I'm doing that. It went beyond a range stat. Let's go. So that is a technique that we're going to use to try to start actively monitoring and recording our mind state. What if you did it every time you were going to take a trade, you frame it and then you come over here and say, oh, here's where I am. Well, shit, that's hard. That's a hard place to be. Maybe we can do something to bring you back into here, or at least get over in here. That's probably the optimum mindset for short side trading. Anyway, that's just a quick look at preview of coming distractions. And the discussion with Hamad on Sunday and Chi Wing is exactly that. So that's what I want to say there. All right, that's everything I got for tonight. We'll get this posted and we'll be after them tomorrow. Tomorrow's a critical state day. It's going to be a big day. I'm expecting sharp reversals, head fakes, big moves. Tomorrow's a day to be professional. Every day is, but especially tomorrow. All right, take good care, guys. We'll see you shortly.
See y'all.
Thanks.